Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the January 20th stock market wrap-up for you to use tomorrow or actually any day this week. And bottom line is, I told you so. I told you that the market was not healthy, that people that bought the rally were wrong, and now we're being proved. And let's go to the S&P 500. The only problem I have is timing right now, but that's what happens in a market that from October to now is basically just going sideways in a consolidation area. Anyway, on Wednesday, I thought the breakdown below the 50-day moving average on the 12th was the beginning, and then the follow-through on the 14th on the S&P 500, the NASDAQ, whatever. I believe that was the beginning of a downtrend. However, we had a very bullish 2 days of reversals on Thursday and Friday, and even though I told you volume wasn't that high, I figured that it was good enough for us to at least have a rally back to the January highs or the November highs or quite possibly the 200-day moving average. However, the very next day, boom, we're proving that nope, we're ready to go down now. The NASDAQ may have fell on smaller volume than the day before, but remember, that was a triple witching, or I believe, expiration on Friday. And then the next big volume bars you can see here on this Friday was quadruple witching back on 12/19. So it wasn't even that much volume. So technically, without the options expiration, I think it was just regular, not even triple. But I don't even care about that stuff anymore because that game is just messed up now. Options game. Unless you do straddles, butterflies, and all that crap. But right now, buying calls and buying puts just isn't really giving you a bang for a buck unless you really are perfect with your timing. So the NASDAQ volume possibly could have been bigger for distribution. However, down 5.78% is nothing compared to the New York Stock Exchange, which is down 6.11% on higher volume. It did not close at the low of the day as 50.53 was the low of the day. But as you can see on the NASDAQ, boom, big dog, 1440.86, low of the day close. So the NASDAQ's back in a clear downtrend on the short term, still in a small, slightly lateral to uptrend on the sub-intermediate term. However, as you can see, it's probably not going to stay. And then, of course, from the July area, intermediate term down, and, of course, from 2008 down, and from the highs in October, for the NASDAQ, it is down 48%, and my worst account is down 13% still from that exact time. Actually, the account was getting me in November, so since November, my worst account is down 13%, NASDAQ's down 48%. You know what? I was quite upset at first, but I feel like a champion now. Bottom line is, though, today, the past 6 days, we have gone from 13 small longs to 5 smaller longs. So that means that we have had to cut our loss on 8 longs during the past 6 days. Well, the good news is, out of our 5 longs that we're still holding, all of them are still a hold. Only one needed to have another partial sell today. So even the longs that we have, everybody, they're doing well. And we have 35 shorts. 34 of them made us gains today. So today was a great day, and for 2009, I'm officially back above the zero mark because I was down 2 to almost 3%, and since then, the NASDAQ is down 8%, and I'm at 0.1, 0.2%, so I am very, very happy. The reason why I'm not up more? Because I only have about 6% shorts. But that changes today. Why, everybody? Because we have 7 brand new shorts, 7 shorts. And since this is a free stock market analysis, I'm not going to name the 7 shorts. But in part 2, we're going to go over the few longs that we have left. And in part 3, we're going to go over these shorts. Now, normally I would go through our short scans, but we had so many shorts in those scans, those are on you. And remember, if they're below the 50-day moving average and the 200-day moving average is at least 25% away, we've got to wait till they get to the 200-day moving average. But the shorts that I'll go over in part 3, you'll be very happy. And they're not all for everybody, but you know what? Even if you're new, it's a reverse long. Just take it. Take the least risky one. But we'll go over that later. I need to look one more time, see how much time we have. 5 minutes left. Okay. So NASDAQ back into a downtrend. New York Stock Exchange in a downtrend. Dow Jones 30. Dow Jones Industrial Average downtrend, volume was well above the 50-day volume average also. And on a weekly, you can now see how big the volume looks on this sell-off. Look at the DJ. Look at all these big, tall, red volume weekly bars, and then look at that red bop. Let's look at the NYSE. Once again, look at all the big, tall red bars in 08 and even at the end of 07. Look at all the big, tall red bars now. And the NASDAQ. Oh, wow. Look at all the big, tall red bars then. And look at all the bigger, tall red bars showing up now, and also the early 2008 ugliness. So now what I'm left with is, let me go look at China, because I want to show you all what China looks like. China, look at it. Still overall in an uptrend. So what I want to show you is the NASDAQ, since the beginning of September, is down 40% since the beginning of September. This is not the actual Chinese index, but it is the Shanghai Composite. It's just the rate reading of China. It's not the entire China stock market, but it's good enough. So that one's down 40%. This one down 16%. Which market do you think is going to have the next round of big bullish leaders that go up 2,390% in 9 months? I think you know which country. Now I'm going to take a look at one more other country, the Nikkei index, because I want to show you what might happen. The Nikkei, even though on this chart only shows it going up to 22,000. In 1990, the Nikkei hit 82 to 83,000. From 82 to 83,000, as you can see right now, the Nikkei is at 8,065. That means it's lost 91% of its value since its top in 1990. So in 19 years, it's gone down 91%. If we have the NASDAQ 2000 in the exact same situation as Japan 1990, the same situation is going to occur. And if we even look when it was at 22,000 to now, that's a 63% loss. But I want to remind everybody, look at the uptrend in 99. That's a 38% gain. Look at the uptrend in 1995. 1995, 46% gain. Look at the uptrend in 2003 to 2007. That was 126% gain. There were stocks in Japan that did well during that time. So even if we have topped and our market falls 90%, we will have uptrends where I will find stocks like Epic, Sigim, Taser, IST, GNSS, LMLP, PDO, DGLY, APPYFSI, and so on and so on. Go look at my past big winners. They'll show up again. Now, the last thing I want to look at is oil, gold, silver. Oil has jumped back up to 38. The new contract rolling forward is 40. However, I believe it'll probably go from 40 to around 35, and oil will stay there. So oil's kind of in a little consolidation range and is still in a big overall downtrend. Platinum is still in a bouncing from that 50-day moving average, holding on to it. It is not as bullish the past 3 days, only up 0.43% compared to silver, which the past 3 days is up 5.39%, still in a clear uptrend, had a bullish tail, so an intraday reversal today, so it did not give back much of all the Friday 6% gain. And look at gold. The past 3 days, gold is up 5.65%, and once again, gold was up today 1.77%. But not only that, look at the bullish tail. Yikes. Look at the bullish tail in gold. So you had the 3% bullish move off the 50-day moving average on Friday, and then now you have the move over the 200-day moving average with a bullish tail intraday up 1.77% again today. That means if you went long gold from that 50-day moving average move, you now have a 5.83% gain on 50-to-1 margin or whatever you have. The last thing I want to look at is the only currency that's bullish. That is the United States dollar. Look at this powerful move today as the U.S. dollar retakes the 50-day moving average on a very powerful intraday reversal. So it opened at 85.57, pulled all the way back to 84.70, and managed to close at 86.25. What an excellent move. And that means if you took that long whenever it went above the 50-day moving average in July, when everybody said the dollar was crashing, you now have a 17% gain on your 20-to-1 margin or 50-to-1 margin. So bottom line, the trend is your friend. We have 7 new shorts, and I'm going to go over those in part 3. We're going to go from 5% short to hopefully 20% short. If the shorts don't work, we cut our shorts very quickly. If they work, this will be the time that we make money. So remember, I'm now back to around 0% for 2009, while the NASDAQ is down 8.63% during that time. So once again, I'm beating the market. And if we're beating the best growth mutual fund right now, that means that we're on top of the world. I'm going to go ahead and wrap it up there. Part 2 with the few remaining longs that we have left is up next. And then in part 3, we'll go over our 7 shorts. This should be our time to make money. If it's not, it will be very soon because this market is broken. Aloha.